Morning all. How are we all doing? Morning Christian, Ian, JC, Michael, Robert, Martin, Virginia, Neo, Gregors. How are you all? Another day, another dollar. It's Friday. Finally. This could be the last day of the week, depending on whether or not this US dollar collapses today or whether it rallies, because I've only got one position on. I've turned the EA off and I've just got to manage that before Christmas. So what I want today is that. And then I'm done. That'll be it. Fantastic. Likelihood is the US dollar is going to rally. I'm going to need to manage this for the next 3 weeks. But anyway, we'll see what happens. Morning, Tom, Lippy, Evil, Amy, how are we doing? So today's non-farm payroll. Unemployment rate comes out at 130. So that's what the market is focusing on and waiting for. We'll wait and see what happens when that comes out, obviously, but we could get a big day today. Still not sure what happened with the yen yesterday. So the news overnight, let's scroll back. Where are we? That's about 5 o'clock. So not a massive amount of news overnight. There was quite a bit of talk about oil towards the end of yesterday. The Iraq oil minister there renewing support for OPEC agreements and commitments to voluntary cutting supply, which means obviously driving the prices up. So that's the whole purpose of the agreement, is to keep a decent price for the product, basically, which it doesn't seem to be able to sustain at the moment. Apart from that, not a massive amount of news at all on the overnight side of things. We had this coming out, the GDP figures for Japan. GDP has dropped, which is negative yen. We also had we've had the German CPI this morning, which came out as forecast, but we also had something else from Japan. Maybe that was yesterday afternoon. When was that? Could have sworn I saw something else about the interest rate. Am I going mad? Don't know. But I did see something else about the interest rate, and then talking about March, April next year to change the interest rate on the Japanese yen. So this is where all this move is coming from. Oh, wrong one. On the yen. Excuse me. So yesterday, US dollar yen, we had a 600% ADR move. I haven't seen a 600% ADR move on anything without an intervention on the yen. So unbelievable move there. 573 pips. Normal ADR on that being around about 100. It's 161 now. So all these ADRs on these yens are going to be out of whack. So all these moves on the yens yesterday, they basically bought the crap out of the yen, and we had one massive order come in towards the sort of middle end of the New York session. That on its own was 140 pips on the New Zealand dollar yen, for example. So that was 150% of average daily range, just that one candle. So this move, we know that the interest rates on the yen have been negative 0.1 for 6 or 7 years, but changing from that regime to a 0 or a 0.1, I just don't see how it's that impactful or important, because it still doesn't make the Japanese yen any more interesting to trade for anybody than the Swiss franc, for example, who has low interest rates than everybody else in the world. So I'm just confused as to why the market has had such an aggressive move into the yen. I think it's probably going to do that. I think it's coming back out. But I don't know. Not seen it before. Can't really speculate, because you've never seen a move like this. How do you know what on earth is going to happen next? So I'm not getting involved in it. I was so close to hitting the button on longing this yesterday. I would have got about half an ADR out of it. That's it. And then this morning, we've had 125% ADR moves on the yens again. So these things are lit at the minute. Just be very, very careful. I've no idea what's going on. This could slip another 300 or 400 ADR today for all we know. It could also drop back 400 ADR. I just don't know, do you? So steer clear. If you're going to get into any of this, get in with a stop. But even if you've got a stop loss, if you get a move like this, your stop loss is not going to get honored. If you got in long there and put a stop there, that stop did not trigger. You would have got slipped down to there and taken 3 to 4% more loss, or 3 to 4 times the loss you wanted to get. So if you're getting in aggressive and going, right, let's see if we can milk these with 2 or 3% per trade, you could lose 10% of your account on one candle. It's just not worth it. It's not worth the risk. So far today, we've obviously had ADR moves, and ADR is now bigger than normal because we've got one day in there which is 600% of its normal range for some of these pairs, and we've actually hit the ADRs on those as well. So this is still moving very, very erratically. So just be careful of all of these today. There's some big money making opportunities on them, but there's also a lot of danger and risk involved. So be careful. So other overnight news was nothing basically. So that's pretty much it for the news. And obviously 1:30 this afternoon is main news. We've got University of Michigan at 3 as well. So it's going to be a very upset New York session today as well. Looking at the DAX, we've got a gap down situation today. Not big. It's fairly decent size, but not massive. Yesterday, we didn't really go anywhere on the DAX. Had a loss yesterday on the DAX because it just went sideways. Market's open. There's your pre-market range. We opened, came straight up and kind of just did the gap fill yesterday and closed. So very, very small up day. Compared to the previous days that we've had, which have been obviously just, this thing's been absolutely crazy. We had one sideways day. That's it. So we've had another sideways day. Could go anywhere today. DAX is not stopping. None of these indices are stopping. There's a lot of volume coming in this morning. Look at this thing jumping around. A lot of volume today. We should get a decent break today by the looks of things. US indices, again, very sideways. All we're doing is moving up and down and up and down. This is typically what you get non-farm. We're not going to go anywhere until non-farm is out because we want to know what the the unemployment rate is going to be, because the unemployment rate is directly linked to the interest rate. So market's not going to go mental until it knows what that number is. So, you know, we could go anywhere basically pre-market today. So we'll see. So upside risks today and downside risks are your high of the previous day, which is this week's high. Downside, we're looking at yesterday's low, will be your initial spot. But that's kind of bang in the middle and it's basically where we opened yesterday. So it's bang in the middle of this leg. So I'm not really sure it's massively supportive, that level. This propulsion gap out of this accumulation is probably the best support today to the downside. Other than that, it's the accumulation itself, which is ADR. So we'll see where we go. No pre-market trade today. Range is too small. So I'll be taking the 5-minute opening range. Just wanted to change my trailers on this account while I remember. Just want to go with a looser trailer so I can make my own decisions rather than getting stopped out automatically on 1R when we get the runners on. So you may, depending on where your offsets are, you may have got triggered on a short there. Not very far. Didn't really get far out, so probably not. But that's the 5-minute range so far. I've got 2.5 minutes left on the candle, so see where we go. Afternoon, oh sorry, morning everybody else. I haven't said morning to. Monkey, Franco, how are we doing? So if you took the pre-markets, you're short now on the DAX. Should be. So let's quickly look at the ADRs while we're waiting for that to kick in. So far, ADRs, we've got obviously the yen, more yen, more yen, more yen, more yen, and more yen. So it's all yen, obviously, because that's what's gone mental. Aussie New Zealand is the other extension that we've got today. So if you look at the Aussie, we had a bit of a rally on that yesterday. So nice, big, strong Australian dollar. The New Zealand dollar has had a bit of a down session during Asia, not massively, but the Aussie New Zealand is the one that's kind of moved. So we've had a slightly strong Australian dollar and a slightly weak New Zealand dollar in the Asian session, which obviously given this the ability to get a decent run on today. So this is a pretty good extension. We're just pushing back up into the propulsion gap formed by the news and these highs, basically. So good levels coming up. Be better if we can get sort of up to 150, 175 ADR today for a short, and then a push back down into that propulsion gap. But it could well just go from where it is at the moment. So there's no real bias long or short on the Aussie New Zealand. I'd much rather be shorting the Aussie than longing it at the moment based on the fundamentals. So these propulsion gaps we get off fundamental news quite often hold, and they stay there because they are fundamental shifts in the direction of the currency. So we quite often get the retest and then we drop, we pull back, and then we continue down. So looks like a good looking short opportunity. If that isn't what's going to happen, you can scale in to a second or third in the propulsion gap and then wait for the drop from there, because it'll be extended and wanting to pull back because you'll be above the RSI there. So yeah, it looks good for a short Aussie New Zealand. That's the only ADR you've got today that isn't yen based, and it's just about to alert. I just has. There you go. Perfect. 5-minute reverse alert just gone in. There's your short. Thanks for the follow, Can. Welcome aboard. So there's your ADRs. Weeklies. Let me just quickly check what happened to that 5-minute opening range candle. Okay, there you go. So there's your 5-minute opening range in. I'm just going to reduce my entries down a little bit tighter because they were nice and loose because of the pre-market range being a little bit whippier. But the initial break off the 5-minute should be hopefully cleaner today. So it's just reducing it down. So absolutely no directional bias on the initial cash balance today. Doji, so no direction there. Upside, obviously from here, you're running the risks of running straight into the gap and yesterday's high and immediately rejecting that level. So upside risk is more dangerous than breaking down today. If we break down, we've got plenty of room. If we break up, we're buying straight into potential resistance, which is never a good thing to do. So we'll see where we go. But at the moment, we're inside bar, not going anywhere. So these, obviously, all these weeklies, ignore everything on the weeklies today. It's Friday. It's the last day of the week. It's all yen. It's all completely confusing. So the only thing you've got extended at the moment, which is not yen-based really, is the pound odd and the Aussie US. So Australian and Aussie CAD as well. So they're Australian related. They've hit their weeklies. Anything you take on the US dollar today, you are basically going to win or lose based on unemployment. Anything to do with the Canadian dollar is pretty much the same. So really the only weekly extension you can look at is the pound odd, and potentially do a reversal on that one. And that is nicely extended to the downside. So this is your weekly move, and we are coming down into support as well down here. So it's a nice looking area for a long and a pullback into propulsion on that leg. So if it's going to continue down, we should look for a pullback and then a drop. So this is a nice looking long opportunity. It's extended on the hourly as well. So pretty good looking long opportunity there on the pound odd as well. You're just about to get a reverse alert on that. Not quite. You've got 2 minutes. Dependent on whether this candle closes bullish or bearish, that will be your reversal there. RSIs, again, pound odd is the only RSI extension that's only just extended on the hourly. We are down below the 30 level, so fairly decent entry, good looking target, nice propulsion break there. So that's a good looking entry, exit rather. Up there, we've got another propulsion gap to target to the upside. So pound odd, nicely extended. Everything else you can see there is yen. So again, just ignore yen. These moves are just not comprehensible at the moment. So everything you got extended on the 4 hour on the Japanese pairs, just no idea. You've got to look at it and go, that's got to pull back. But why did that happen? Why is it so aggressive? Why is increasing your interest rate by 0.1% back to a zero that good for a currency when every other currency you could put your money into is going to give you a better return? There's just no reason for that. So yeah, market's gone mental. I don't know whether it's, we get occasionally, there's safeguards in place now in central banks and institutions for algos to go crazy, basically. And we've had these instances in the past where algos have caused crashes in the stock markets and they've made weird FX moves because they, it's a program at the end of the day and it's told to do something when a certain instance occurs and they think about everything they could possibly come up, but they miss stuff. And you just have to look at this and go, are you sure that wasn't algorithmic? Because there's no fundamental reason to move something 600% of its average daily range just because they said they're going to increase their interest rates after 6 years to a lower point. It just doesn't make sense. We've had this before. We talk about it all the time in here about knee-jerk reactions to news, which basically is the market overreacting to something and then going, actually, no, that's not really what we thought it was. And that's why we get the V-shaped recoveries. That's why those V-shaped recovery moves happen, because the market overreacts and then it corrects. So I just haven't seen one that big, which is, got to ring alarm bells when you look at the grand scheme of things. And we had a big sell-off here, but it was orderly and it happened over multiple days, not one day where it did the whole thing. That's more like an intervention move or a fundamental shift. That is an intervention. That is an intervention. That is an intervention. That's not an intervention. And if it is an intervention, we should have heard about it because they normally tell us. So odd. It's just an odd move. But things like this, you just kind of got to ignore and get on with it. So there you go. So there's your analysis done. Obviously, yesterday's thrown an absolute spanner in the works with all the Japanese pairs. Other than that, it's pound odd. Nothing else to look at. Market's getting ready for Christmas, I think. I am short on the DAX, which is good. So downside target, very nice and easy. Yesterday's low is your initial downside target. Failing that, 5R is just getting down to ADR, which is in that accumulation, which is a good target as well. So we'll see where we go, see if we get the continuation on the break. But markets tend to be, in general, on non-farm payroll day, very flat. Markets don't want to, banks and institutions do not want to put a large move in on anything ahead of an unemployment figure because it can potentially fundamentally shift the direction of that currency. However, at the moment, it doesn't really matter whether employment goes up or down because they're all focused on inflation and they've indicated already that they're going to be dropping the interest rate next year, which is primarily what is affected by unemployment, and doesn't really matter what the number is. They've said they're going to do it anyway. So if it's positive, it reaffirms it. If it's negative, it's just a case of that's good, we're still doing it. So it's all negative US basically, regardless of what that number comes out at today. However, it depends whether or not the market wants to move on it. So we will see. If we get an as expected, it will probably just whipsaw and go nowhere. But we'll see what happens. 1:30 this afternoon. I'm toying with the idea of not trading the US indices this afternoon because it depends on the size of this move. If we get ADRs hit off the back of that, we quite often get absolutely no movement at the open. And after yesterday's whipsawing mess in the US, I kind of don't really want to repeat that. I'd like to save my month, but we'll see what happens. So I'm not going to stream. I was planning on potentially doing a stream at the unemployment rate because I won't trade it. It's just there's no point in sitting here looking at it and going, oh yeah, it's done that. Everyone can see that. So I'll probably keep the stream as it is, but not sure whether I might give it a miss for trading this afternoon. Basically just want to see how much movement we get on it today. Right, DAX is stuck. If anybody's got any other FX pairs they want to look at, let me know. Because at the moment, there's not a lot else to talk about this morning because there's not a lot moving. Afternoon, morning even. Dion, Kennelly, how are we doing? What's my thoughts on oil? Don't know about oil. Oil's struggling at the minute. OPEC can't get any agreement out of the oil producing nations as to what they're going to do with supply. So we're kind of in a bit of a, not so much a stalemate at the moment, but we're at a point where theoretically, from a supply and demand perspective, we should see oil now start to correct because they've reached an agreement, but the agreement is fragile. So I'd be more interested in long than short from a technical perspective and from a fundamental perspective as to what the agreement's been with OPEC. We've had Iraq come out yesterday and confirm they are happy to fall in line as well. So it all looks bullish, but it's been bullish for the last month and the market hasn't actually managed to progress. It's dumped. So up, but it may well come down and retest this area first. This level of support is very, very good. If you scroll out a little bit further, you can see how good it is. We basically had this area of balance we traded in, which was back in February. Forecast was $95 a barrel. The market collapsed. We hit this level here. We bounced out. We slammed through it. We came back up and bounced out. We bounced out. Then we rallied. Then we gapped up and everyone went, brilliant. This is the run to 95. Then it collapsed. We retested. That's where we're going. So if it drops and if I wanted to get into a decent position on this, I'd be sitting there now waiting with pending orders sitting here because everyone else will be doing the same. Banks and institutions included. They will be buying 67.25. So that's where you want to buy it from and stick a good half an ADR, 3/4 of an ADR stop on it and wait for it to get to $100 a barrel in the next 12 months. That's the best play in the world. But it could well not get there. Yeah, it doesn't have to get there before it rallies. So if you want to get into a position, this is a pretty good position trade entry at the moment. You're just about to get a reverse alert on the 4-hour there. So we know that we've got the buyers on board sort of on the longer term time frames. Take a position there. If it doesn't work out, scale into a second, which is going to be roughly an ADR apart, and wait. So it looks good for longs. And as I say, the trouble with oil at the moment is it's a very fragile situation with the oil producing nations. They're not agreeing on stuff. So they have the ability through OPEC to control pricing through supply and demand. Yeah. So if basically they want price to go up, they just start producing less oil. Therefore, because there's less of it available, they go, well, if you want my oil, you're going to have to pay a little bit more for it. And obviously oil price rises. And they've all got this conglomeration where they can control the price. At the moment, they're not agreeing on what to do. And we usually get rallies during times of conflict and times of uncertainty. We're massively uncertain at the moment. We've got two major conflicts going on and the price is dropping. Again, things have changed so much in the last 3 years. It doesn't really make sense. Supply and demand's not working. So, but you have to look at the technicals lining up as well, and look at previous pricing on oil. If you go back to a daily chart, where we are here, is an area we've headed into quite a few times in the past and had reactions at. So this area, this 67.25. Don't forget there's economics involved from business perspective here as well. It costs money to produce it. It costs money to mine. It costs money to do all of this stuff. There is a price point, a line in the sand, that it becomes uneconomical to produce. And it looks very much like at the moment this is roughly where it is. So that's good for longs, but you can't deny that 5-day collapse. A bit like the yen at the moment, not making any sense. Thank God it's Christmas. Pound US dollar. Stuck in the middle of nowhere at the minute, not going anywhere. DAX hedged. Oh my God, what a nightmare day today's going to be. It's got the fit. This week, today's my last day trading. I'm knocking it on the head this week. I'm just going to shut everything and walk away. This market has absolutely no clue what it's doing at the moment. It's erratic, it's irrational, it's whippy, there's no volume, it's slippy, it's just horrible. So time to give it up. Come back in January. So yeah, nowhere really. It's just stuck in the middle of no man's land at the minute. You know, whatever you do with this today at 1:30 this afternoon, it's going to do that. So pick a direction and hope the news takes you there. That's all you can do with pound US dollar at the moment. Long term, at the moment, it should be bullish. So I wouldn't be surprised. We could get a bit more of a pullback on this leg, but I would expect it to go up until Bailey comes out and says we're going to reduce the interest rates faster than expected. And then obviously it will come down because even if the US dollar is coming down, it won't be as strong as the US dollar push. So it will come down against the US when they fall in line. Pound CAD looks ready to drop. Yeah. Potentially. Again, if that oil price rallies, that will happen. If we get positive unemployment figures today, that will happen. But for the next few weeks, you're not going anywhere. It's Christmas. Christmas. Stuck in Euro CAD, Euro Swiss, and Euro New Zealand. Yeah, this week's not gone anywhere, is it? So that's Friday last week. This is Friday this week. Nothing you can do. If you're not going anywhere, you're not doing anything. There's nothing you can do. You just got to sit there and wait. Market's just not going anywhere at the moment. Unless you're on the yen. And then it's going somewhere very fast. Too fast, in fact. So just looking at targets on the DAX. Upside is going to be yesterday's high, which I'm going to just go 4R on this today. Downside is really tricky today. So upside, we could potentially just do the gap fill at yesterday's high and reject. So this level is a very good resistance we hit yesterday, but that is basically where we closed. So you can't say that for sure this is a resistance hit because it could have just screamed through that yesterday if the market hadn't shut. So it just kind of happens to have ended up back where we were at that high. So that is, however, yesterday's high, and you will find a number of limit orders sitting at the highs. So we'll see. If we push through that level, I would be looking for high of the week as next resistance. So somewhere around about 4.5R. To the downside, yesterday's low is 2.5R. You've got a good support resistance there, which is around about 3.5. I feel like I've done this before. I'm feeling a little bit like the Matrix. Remember when we got hedged on this yesterday and it went absolutely nowhere for the entire day? This is exactly what I said yesterday, wasn't it? If we run long, I'm getting out up there. If we run short, I'm getting out of that support and resistance. So it's the same as yesterday, because yesterday nothing happened. Something will happen today, because we've 1:30, we've got non-farm payroll. So the DAX is going to move with the US indices at 1:30. So either way, this is going somewhere today before the New York Open. But I wouldn't want to get out too soon on this today. So I'm going to go 3.5R, just because we're likely to get a big spike off of non-farm. So I will come back to this at 1-ish and see where we are and adjust targets from there, I think. But that at the moment seems like the obvious spot for a bounce. That's what I'll go for today. And we'll see how we play out. Something in my eye. Not an eyeball. Why not try out ORB trade for news? Because you'll get slipped. Try news trading. You'll stop. New Zealand dollar, US dollar. Got whacked today. New Zealand US. It's going nowhere. It's just sideways. That's why you're getting whacked. If you're trying to pick a direction on it, it hasn't got one. There's no point in trading anything US today unless you are getting into a speculative move ahead of the news. So 1:30 this afternoon, this is moving. Until then, you'll probably do quarter to a half an ADR up and down if you're lucky. It's just no point. There's no analysis on it. So that's ADR to the upside. That's ADR to the downside, which falls in line with yesterday's low. So you're going to do that until 1:30. And at 1:30, it's going to do that or that. Day 3 of SIH should have back tested till the end of the week. Why? You can't. It doesn't matter when you start, Tom. It doesn't change it. It doesn't suddenly become more profitable if you only start doing it on next Monday. It's just days. Days are days. Win days, lose days, huge days, small days. Just trading. Morning XR update.news. So these euros at the moment, basically they're all kind of gone nowhere this week. So we're just back to where we kind of started at the moment. Euro's got no power, but it's not particularly weak either. So what we're nothing is particularly strong or weak at the moment. You can see from the bias scorecards, you know, there's no fundamental advantage on anything at the moment. The majority of the market is range bound. There's a few bits which are a little stronger than others, but because everybody's fundamentals are the same at the minute, stuck. There's no currency that is better or worse than any other out there. So interest rates are now flat. We've finished hiking across the board. Inflation is coming down at a rate of knots, which is great. Unemployment has managed to stay pretty stable considering the interest rate rises. So there's no advantage or disadvantage massively with any currency out there. So you're reliant with the euro at the moment, and most currencies, to be fair, on what happens with the other currency. So if the Canadian dollar suddenly starts to rally, oil price rallies, the US rallies on unemployment figures being good, the euro CAD is going to go screaming to the downside. If that doesn't happen, oil stabilizes and just goes sideways, Canadian dollar will drop. If the US gets negative unemployment figures, the US will drop and the CAD will come down with it. That will fly to the upside. So same with the Swiss franc. If something happens and there's a massive safe haven run into the Swiss franc, this is coming down. If everybody pulls all their money out of the Swissy, that's going up. Yeah, so everything's going to be affected for the euro. It's a little bit like it was after COVID, 2020, when we locked down. All the borders shut. Europe relies very much for the vast majority of its economy on tourism and travel. No one could do any of that. So therefore, their economy shut. And when we came out of lockdown, we still couldn't go out of the country. So Europe basically stayed locked down for longer. That had that massive impact on the euro where it collapsed for ages. Then it went into a sideways motion because it couldn't recover and it couldn't make enough money to drive the euro up. And there was nothing going for it apart from higher interest rates. So it went sideways. And all that happened with the euro for about a year and a half was every time the other currency moved, it went up or down. But the euro, doesn't matter whether it had massively positive or massively negative news, it just went like that. It was flatline. And I think we're getting back to that situation with the euro now. There's no real advantage in having any money in the euro. So I think it's just a case of it's become the whipping boy of the market again. So you're reliant really with a lot of these pound pairs, euro pairs. If you're in all of them, you know, it's going to be a case of it will get pushed by the other currency, like the yen. Yeah. So same with the US dollar today. Going to move on that, isn't it? So kind of stuck on them, really. Which is why I'm not really looking at the euro when I'm in the euro CAD. I'm not really looking at the euro. I'm looking at what's going to happen with the CAD because that's what's going to help me in or out of this position. What happens with the CAD at the moment. So, but we will see. So DAX has sort of done the gap fill, not quite. Not a massive amount of volume today. We will see. Tom, just kidding. It's been a good. I've just got railed yesterday, and today isn't looking much better. No. Well, it depends. You know, this is the thing with this strategy. At the moment, all it is hedged. Same as yesterday. You know, I tried to get out of the hedge yesterday. I managed to get out of a $700 hedge. I came out of it with about $400 loss. So I managed to remove half the hedge, but through waiting all day and then making a decision an hour before the New York Open as to, right, let's try that. That's all you can do. Right now, it's hedged. If it screams up to there today, fantastic. Probably going to make about $200 or $300 out of it. But, you know, this is the thing with this strategy, with any breakout strategy. It's not just this stock index hedge or the opening range breakout strategy. Any breakout strategy, if it doesn't break out, you don't make money. That's when you want to be a mean reversion trader. Yeah. So when you've got a range, there's two ways of making money with it. On a breakout or by mean reverting it. Yeah. Totally different strategies. There's trend trading, there's breakout trading, and there's mean reversion trading. There's only three types of trading in the entire planet. You can only do three things. You can either jump on a trend, you can take a breakout, or you can play the pullback on up legs and down legs. That's it. That's all you can do. That's it. That's trading. There's only three strategies. You can get into those three strategies in a billion different ways. But at the end of the day, range, you can't trend trade. Yeah. You can't breakout trade. You can only mean revert. Trends, you can't breakout trade very easily because you don't get accumulations. You can mean revert in a trend. That's good. And breakouts, you can also mean revert. Yeah, which is why I'm a mean reversion trader. Because if the market goes like that, I can mean revert. If the market goes like that, I can mean revert. If the market goes like that, I can mean revert. This is why I'm a mean reversion trader. There's a video on the website about it. Doesn't matter what the market does. I can get in, I can get out. If you're a trend trader, you can't do anything unless it's going up or down. If you're a breakout trader, if it goes sideways, you're dead. Yeah. And this is a breakout strategy. Yeah, if it does this, you're dead. There's nothing you can do about it. You have to take these days. When, however, you get those, you will make way, way, way more money than you will lose on those, because we are only getting into one trade a day. When that one trade a day becomes a 5R, you're going to make a lot of money. But you just got to wait for them. You don't know which day it's going to be, because if we knew that, we would do it, wouldn't we? So just part of the course, you have to sit through them. If you do back testing on any breakout strategy, on the opening range breakout EA, stock index hedge EA, any breakout EA you buy or you get or you make, you will find the P&L does this. And you'll have areas of stagnation where you make a new high, then you pull back and you chop around and you make a new high there. That could be 3 weeks, 3 days, 3 months, 3 years, depending on what time frame you're trading. But there will always, with a breakout strategy, be a stagnation period. You cannot avoid it, because markets do not do the same thing all the time. They have periods where there's no interest because something goes on where people don't want to buy stocks anymore, or the Japanese yen has a period of uncertainty where we're not sure whether we want to buy or sell it, where we have a COVID lockdown and the euro basically is unable to do anything economically because there aren't any customers. You're going to get stagnation. So you have to switch strategies. The difficulty in trading is identifying what market regime you're in, because by the time you've identified a trend, the trend is probably ready to end. By the time you've identified a range, it's ready to break out. That's why everybody makes losses all the time, because by the time they've found what strategy they need to use, they've missed it all. Mean reversion works everywhere, which is why we do it. Apart from the breakout strategy. But this is based on momentum, obviously. This is literally breaking out on 1 hour of the day. So it's a different, totally different thing. And it's not a continuous breakout strategy, which is where everybody gets killed. When you've got a breakout strategy that you trade 10 times a day, there's an ability there to make 10 losses. This will only make 1. And it's guaranteed to be an amount, isn't it? So better than most. Colonel Pinecone. Morning, Grateful Buster. And crap trading. It's Christmas and crap trading? Is that what you meant? Yeah, certainly is crap trading at Christmas. Nothing you can do at Christmas. It's just one of those periods. So nothing's going to happen today because we're waiting for unemployment rate at 130. So there's not much point in looking at anything else today. We've kind of looked at everything that's moved. The yen's, it's just, you know, in the Asian session, we had obviously 5 or 6 hours of complete lunacy again. I have no idea what this thing's up to at all. Where it's going to go today is anybody's guess. Is it going to mean revert, or is it going to continue, or is it just going to sit here and do what the hell it likes? Look at the last time we had the US dollar yen intervention and see what happened after that intervention failure. There. 4, 5 weeks. Then we woke up. Yeah. That's potentially what we might have on the cards now. We've had this crazy move. We might just sit here now and be shell-shocked for weeks. In fact, it's probably what will happen, isn't it? It's Christmas. You have to ask the question, have they done that just because it's Christmas? And they know that there's nothing anybody can do about it. No. Could be just clever Japanese thinking. Who knows? Anyway, so yeah, good luck with those if you're going to get into them. I haven't got a clue, but use a stop, because if it does that again, you do not want to be position trading the ends. So yeah, we'll see what happens. DAX, we're at yesterday's high, so there is a potential failure point here. It doesn't seem to me like there's any limit orders here at the moment. We're not really triggering much at all. So I think we're probably going to grind through this high, but we'll see. It is stopping the moment. But as you can see, there's very little volume here. We're ticking up and down so slow. So we'll see what happens later. So I'll have a look at this one later when we come back on for the New York session. But I'm just going to stick with those targets at the moment. If it doesn't go anywhere, it's just going to be a lock-in loss. But there's nothing else I can see really to get out of this. It's just one of those days. I think it's probably going to be like yesterday, so not much fun today. Do something else. Go and walk the dog or something. I'll be back this afternoon, 2:20 for the New York session. While unpick what's happened in the unemployment rate. And then obviously back on Monday for the Frankfurt session. But I'm going to play it by ear next week. If we get a load of really weak opens and we just get very little movement on FX, I'll probably just stop the live rooms at some point next week, because if there's nothing to look at, nothing to talk about, we've got no ADRs, we've got no RSIs, the market doesn't open, it's just no point in being there, is it? We'll come back in January. So from now on, from today on, it's just going to be play it by ear and see if stuff moves. And if it doesn't move, we'll knock it on the head. But you can never tell when the market's going to go to sleep. So we just have to wait. All right. So have a good day. Have a good morning. I'll be back this afternoon, 2:20. We'll have a look at this. And if it gets anywhere, I'll post it in Telegram. If anything else exciting happens. All right. So have a good morning. I will see you hopefully this afternoon. If not, on Monday, same time, 7:50. Have a good day.